do have my dates in order. So it is Thursday the 6th of February. And as usual, we have our Thursday webinars. And again, they're every Thursday at 9:30. Hopefully you find them helpful. We're going to take a little bit of a backtrack today and just do a quick couple of updates. The first one is a reminder of the close dates. And just so everyone knows, if your clients want a 3/1 effective date, then application has to be made by 2/15. So, you know, that's Saturday of next week. So cutoff really for us is going to be 10 a.m. on the 14th, which is next Friday, for off-exchange plans. Obviously, for on-exchange, you know, applications are taken online up until midnight of that date. But if you currently have an insured or a client that is not insured, 3/1 really is the last date that they're going to be able to secure coverage and not get a penalty, because the law says that if you are insured for a period of less than 90 days, then you're not subject to the individual mandate, pardon me, the individual mandate tax. So 3/1 is kind of it for the people that fall within those guidelines. Just a quick EBIX update. As many of you know, we offer the free quoting portal as well as an upgrade. Pardon me. At this point, all plans, all products are uploaded onto the EBIX portal except for Independence Blue Cross. So they are making progress. As far as our web broker contract, you know, again, it's really in the testing phase, and that's being held up by CMS. We did talk with our contacts at EBIX last week, and you know, a good estimate of when the web broker contract is going to be fully functioning is probably close to April. So just keep that in mind. And some might be saying, well, April 3/31 is when the portal closes down for open enrollment. But keep in mind, you have a lot of people coming up for renewals, either on group or individual. So even though 3/31 is the close of the initial open enrollment period, you will have clients that need insurance throughout the year. So hopefully the web broker contract and functionality in April will make that process a little bit easier. Another reminder is on the shop quotes. These are available. It is, you know, a small group. It's the small group health options portal. I'm sorry, that's what SHOP stands for. And if you need a group quote either on SHOP or off SHOP quotes, they can all be requested from John Reel, and he can, in our office, and he can get those for you. But you just have to be specific in letting him know that you're looking for SHOP rates, not in plans, not off SHOP. So I wanted to also take a little bit of a back step, because in the news, I'm sure many of you watch the news, and this PPACA law is a moving target, but there was a recent report that talked about, you know, about 2.3 million jobs, full-time jobs, are going to be lost and go to part-time jobs, and that's in combination with the estimated 50 to 100 million people that are currently employed by or insured through an employer-sponsored plan that will have an employer dissolving group coverage. So I wanted to just kind of talk a little bit about strategy. Of course, it's going to be very important as groups come up for renewal this year. And for those groups that took an early renewal of 12/1, it's going to be a strategy that you need to just put in place for when you're talking to your group clients, because quite frankly, all groups are going to want to talk about 4 specific options. And let me get to this screen so it's a little bit bigger. All right, here we go. So your strategy when you're talking to groups is to, first of all, groups are going to want to talk about what their options are, penalties or not, if they dissolve group coverage and send their employees to the exchange or off exchange to obtain their own individual health insurance. So that's going to be something that if you're not talking to your groups about this, they're going to want to hear. So I think it should be within your areas of focus that you talk to your employer-sponsored group plans about this. We're not advocating dissolving group coverage, but sometimes that financially makes sense. Another option is defined contribution, where an employer would pick a base plan, either on or off shop, and have a really finite or definitive monthly premium that that employer is looking at. And an employee could buy up a plan from the base plan, or an employer could actually just say, I'm paying X percentage of premium, whatever that is. And again, those costs are fixed for that employer, and the employee could choose to buy up. There are a lot of different options within defined contribution, but those are two of the ones that you'll want to be prepared for that as well. And we can help you with that as well. Another option is to look at either keeping your group coverage, of course, going with a shop plan if your group falls within the guidelines for a small business tax credit, or off exchange, and coming up with a strategy to keep an employer-sponsored group plan in place, but maybe tweak some of the employer-sponsored benefits or payments. Reduce what the employer's paying, pass more on to the employee. So there are a lot of ways to keep your group health plan in place for your clients. So that's definitely going to be an option that you want to talk about. And then last but certainly not least is, get a custom plan with self-funding. Self-funding plans, not fully self-funded plans, but the quasi-partially self-funded plans are really a good option. They're secure, but it has to be for the right group. And the self-funded programs are really becoming much more popular for groups because a lot of the guidelines within self-funding fall outside of the PPACA requirements. So it is a good option, and it should be discussed. So I submit to you that when you are talking with your groups, that this is a great strategy for you to be prepared to discuss all of these options with your employer-sponsored plans or group clients. Another real popular option is what I'm calling like a hybrid option, where they go in and they can choose not to have an employer-sponsored plan, but the employer might want to pay 100% for a gap plan. It fills in some deductibles and co-pays with the gap plan. Or that employer could pay 100% of a critical illness plan and not provide any assistance on individual insurance. So there are a couple options that may or may not work for all groups, but again, when you're talking to your employer-sponsored clients, you're going to want to talk about these 4 strategies. So let's get back to the webinar and the agenda. Just real quick, reviewing some of the outstanding issues. As we all know, children under 19 with parents of incomes of 314% or lower really have no choice on the exchange but to go to a CHIP program, because incomes of 314% and below would qualify for some level of subsidized CHIP coverage. So therefore, by law, they have really no choice but to seek coverage through CHIP or Medicaid, depending on their FPL percentage. If your clients and their parents do not want to have separate coverage for their children, as compared to what they have, the only option at this point is to take that family, and apply outside of the exchange with no subsidy. So that's really the only workaround. There's still an issue. I had quite an interesting chat session with an HIM worker yesterday regarding the children 19 to up to age 26 that are still not able to enroll on their parents' plan through the FFM. By law, we all know that children can make application as a dependent under their parents' plan, whether they're married, living with them, offered group coverage elsewhere. So, you know, the law is pretty clear that these children are allowed to be on their parents' plan. The glitch in the system is with the FFM that when the child indicates that they file their own taxes, as many do, it rolls them off into a separate account and not under their parents' plan. So unfortunately, this issue is still around. There's no manual workaround. These children really are forced to get their own plan. And again, the only workaround is to go off the exchange and have a plan as a family together without any subsidy. So the next bullet point is FFM issues, and I'm really interested in finding out what your issues are. And I would ask that during the open forum where you type in questions, if anyone has specific issues that they're working on through the FFM, I would ask that you either type in the question so we can address it, or you raise your hand and I can unmute you and we can talk about it. We did have one submitted question, and it comes from Dave. And this is a pretty consistent question that I get. But Dave asks, what do you do when signing up a client and when it comes to their email address for verification, they either do not have a computer or do not have a way to access the email that was returned to them? How can he continue, Dave asks. Well, within the registration on the FFM, there is, when you're creating an account, there is the ability to create an email. Now, this involves some issues in and of itself, but if you have a client that does not have a computer, does not have email, when you're registering this client or assisting them in registering, they can create an email, and then once that's created, then you can just log into the gmail.com or outlook.com, Yahoo, AOL.com, and access the email that way. The only other workaround, if they don't want to create an account or you don't want to create an account, is doing an over-the-phone application with a health insurance marketplace worker. So, you know, we're limited to what we can and can't do, I suppose. So now I'm going to open it up to questions. And again, I ask that if you have questions specific or issues specific to the FFM, that you bring them up, because again, we're all learning from this process, and if somebody else runs across a similar issue, it may help them to deal with you know, the issues that you're having as well. So not a lot of questions today. Margie asks if I could repeat what I said about EBICS for mid-April. And what I'm talking about, Margie, is our web broker portal is slated to open in April. That's the date they gave me. That may or may not come to fruition, but at this point, we're looking at April. Margie also asks, shop benefits and rates are the same as off-exchange. Why be specific when requesting quotes? Because Capital has, some carriers have different shop plans in and out of exchange, and it's just always helpful to know what we're quoting, shop or non-shop. And do any companies lift bill? There are some companies that used to lift bill, but you had to have you know, 5 or more on the plan. There's workarounds to lift bills, but I wouldn't recommend that option. but if you have a specific group that you're looking at, Margie, let's talk about it further and see if we can work with a list bill. There are ways around a formal list bill, and we can talk about that as well. Dawn asks, children 19 to 26, can you include children's income with parents to avoid FFM issue? And according to the guidelines on the household income, when you are estimating your household income, you do include any dependents who make enough money to be required to file a tax return. So that they are included in the household income according to healthcare.gov. Justin says, please show a slide of 4 options for group health plans and briefly summarize each option, including extra points you gave regarding critical illness plan. And I can do that. They are, and I apologize if this is going to be redundant for many of you. The 4 options are when you're talking to an employer to dissolve group coverage and offer individual health plans, either on or off exchange for the employees, whether the employer contributes any portion of that or not. Defined contribution is where an employer can pick a specific health plan as a base benefit and pay for all or a portion of that. And then the employees can either choose that plan or a buy-up feature, or an employer can say, I'm paying X amount of dollars or X percentage of premium, and whatever plan you choose, anything above this amount is the employee's responsibility. And again, the 4th option is keeping with their group health plan, talking about whether it's better to go to the shop plan or off shop. And then, of course, the 4th plan is a custom plan and self-funding, and taking that fully funded group plan and making it a self-funded plan. No matter what option you choose, there is always an option for an employer to put in place a gap program that fills in the blanks of a larger deductible. So if an employer is paying 100% on a gap plan, then the employee may actually be able to choose a bronze plan, you know, for lower premiums. So that's it briefly. And Justin, if you have additional questions, you know, certainly give me a call and we can talk more specifically about it. And let's see, other questions coming in. Dennis said he's having an issue with Highmark's progressive versus comprehensive drug formulary, trying to determine if individual drugs are or are not in the particular formulary. And Dennis, I don't blame you. It's a bit confusing. On the HighmarkBlueShield.com site, there is an RX search. I guess the confusion is that different plans have different, you know, the different formularies. So when you're choosing a Highmark plan, you have to really be specific about what prescription benefit that particular plan has. I find the formulary on Highmark's site to be pretty good. But Dennis, if you have a particular drug that you're questioning, your case manager can certainly always contact Highmark directly or do some research on your behalf as well. And let's see, Don says, do you know minimum income for filing tax return? I was just looking at that yesterday, Don, and I believe, I don't want to say it in case I'm wrong, but I believe that for unearned income, for a child with unearned income, anything over 1,000, they have to file taxes. For earned income, anything over 6,000. I would say that if you have more specific questions, you can either Google some information or certainly give me a call and I can help research specifically what you're looking for that particular client. And Margie asks, has the percentage of employer contribution changed for group health? It has not, except for during the shop the group open enrollment, which is 11/15 to 12/15 of each year. And that's a period of time that an employer doesn't have to meet any participation requirements, except they have to have at least 2 employees, and doesn't have to adhere to any premium percentage participation. So that's 11/15 to 12/15 of each year. Other than that, the percentage of participation or employer contribution has not changed. Mario says, FFM has gone somewhat smoothly as of late for enrolling clients. So, well, now you said it out loud, Mario. Now it's going to go to hell in a handbasket. He says, the only question I have is, what are you seeing on your end in regards to healthcare.gov transferring broker data to carriers for commissions? And that's a really great question. I know that there are a lot of cases that have fallen through the cracks, and but for the most part, I'd say from November, maybe November, December on, the information has been pretty accurate from my understanding from the FFM to the carriers on that 834 reporting. I do have to tell you that we may be reaching out to you because we did receive some information, some commissions from Highmark, and there are about 213, that's 213 cases that don't have any broker information. So what I'm trying to do now is determine if that was a Highmark issue, that it was just keyed in incorrectly, or if that is an issue that we will need to research to see, whose cases they really are, if Highmark doesn't have that information. So more to follow on that, but that's kind of our first glimpse at some of the issues that may occur. And Tim says, URL website shows Blue Shield plans and rates available under the on-market category, but when doing an enrollment via FFM, FFM will not have the same plans or rate at the point when they say you qualify for a subsidy, and here are the available plans. Why do they not match? Tim, they do match, so I'm not sure. I'm not sure of those particular details, but let's talk about it, because the rates are the same and the plans are the same. The only thing I can think of is that it is a person that would fall into the second category of the cost-sharing subsidies, and then the plan designs out of pockets actually do change relative to their percentage of cost-sharing subsidy, either the 73, 87, or 94%. So that's the only reason I can think that the FFM plans would appear different. Pardon me. But let's talk about that. If you can either call me or shoot me the details. If your client's under 250% of the FPL, then that's probably what you're experiencing. So it looks like those are all of the questions. I want to see if anybody has raised their hand so that we can answer questions live, and it doesn't appear to be that way. I will go back to my original slide if there are no more questions, and just remind you of 2 things. Next Thursday at 9:30 we'll have our weekly webinar, so that's the next event. And also this afternoon at 2 o'clock from 2 to 3 we're running a Geisinger webinar, and it's going to be very specific to Geisinger plan designs. You may have noticed that Geisinger has some really competitive rates, and I thought it was important to do a little bit of product training and regrouping, because quite frankly these plans are now available on their entire footprint, not just the 9 counties in South Central PA. So it is a really good option as a choice in carriers for your clients, and thought it was important to get you some more information on that. So that brings our session to a close for today. Again, I appreciate the time that you take every week to participate and your great questions, and I will talk with you next week if I don't talk to you before then. Have a great day and a great weekend. Bye-bye.